Apple has been struggling recently, falling 12% from its high and breaking below its 200-day moving average. Does this mean more losses are on the horizon? Joining us today to tell us what's next for Apple is MoneyBeat's Kristen Scholer. Kristen, thanks so much for being here. How significant is all of this for Apple?
So I think there are three ways to really put this decline in context. First, as you mentioned, it fell below its 200-day moving average. Second, it's now in correction territory, down 10% or more from its recent high. And third, it's also down 10 of the past 11 sessions. So for Apple, this is pretty significant. This stock had been a darling to start the year. It was up as much as 18% earlier in the year, on the year, far outpacing the S&P 500. But with the recent pullback, it's now only up about 3.5% on the year. Still a little bit better than the S&P's roughly 2% gain, but still, it's lost quite a bit of ground.
So what's behind this? I mean, we know that the Apple Watch didn't perform quite up to expectations. Is there something more here?
I don't think there's any major new news out here, especially in the past few days, that is driving the stock lower. As you mentioned, the company did report earnings July 21st, and those iPhone sales did miss some analyst expectations, and the stock, as we've seen since then, has been weak. But in the past few days or so, there isn't any particular catalyst that's continued to drive the stock lower.
So do you think we're going to continue to see a downward trend here?
When a stock moves below its 200-day moving average, that can sometimes portend that a previous uptrend is actually reversing. But in Apple's case, I'm not so convinced that that is actually the case. I mean, the company will debut its new iPhone in September. It has earnings that are coming out in October. And so it does have, several opportunities baked in the next few weeks and months or so to really kind of recover from here.
Now, the iPhone particularly, but also a little bit the iPad have been behind the sort of the strength of Apple. Is there a moment when the Apple Watch is going to need to take over?
So several analysts think that it may take several years for the watch to really gain momentum, for consumers to latch onto it, for it to take, account for a larger part of Apple's revenues and overall sales. In the latest period, the iPhone still accounted for more than 60% of Apple sales. And so that's a huge driver here. And I think in order for the company to recover and for shares to recover, it's going to need to, like I said, report strong earnings and then also show continued success in China, which is a growing market for the company.
All right, Kristen Scholer, thank you so much for all that.